low. And, you just can't bear to pay 60 or 70 grand. I said, look, it doesn't matter. I mean, I paid, I don't know, whatever I paid. I mean, in the thousands for probably as an average. But, Max Kaiser was paying $2. And I, I don't regret Max. I mean, I just recognize that, I mean, someday my average cost is going to seem incredibly cheap to somebody who's paying $2 million a coin. So it's just, it's Saylor's point. I mean, it's going up forever, Laura.
Printing revolutionized knowledge sharing. Bitcoin has the same effect on money, allowing us to store value without a small minority controlling it for the first time. Bitcoin will change how we think about money and investing, just way the internet did. People will find it easier to make smart investments and avoid wasting money on unprofitable ventures. Like our predecessors who believed it was a good idea to bleed patience, we'll look back on our previous financial practices and wonder how we ever thought they made sense when he made internet investments in 1993 and 1994 for well-known investment manager and Bitcoin enthusiast. Bitcoin Larry, as he is known, invested in Bitcoin when it was worth $300 a coin. In this interview, he discusses the current state of Bitcoin, how it is similar to the early internet, and why he believes it could reach millions of dollars per coin. Please like this video, subscribe to the channel, and turn on post notifications for more videos like this.
Some of my basic things about venture capital business, what I learned. Probably when I talk to new people going to the venture capital business, one of the things I say to them is, look, the major thing that you want to look for in the venture capital business is Gene Kleiner was the guy who told me this, or told it, not me, but he told it to, people. He wrote about it, is what he called dogs eating the food. You want to look for, something that is being used and there are more people using it every day. Okay. You want to look for obvious growth trends. And if you see an obvious growth trend, then you can extrapolate it out and say, if something is growing, all other things being equal, it's going to continue to grow. And one of my big winners in the internet space was a company called Netcom, which we put like $5 million into it, a $15 million valuation. It got sold to AOL for, I don't know, $280 million or something. I mean, we made, $100 million. That's something that was crazy. When we were into Netcom, it was a dial-up service in the Silicon Valley. And the guy started it out of his garage, and he had people literally just dialing into his server, which was then connected to a bigger server, which then talked to the internet. And he was charging him $20 a month. And, when I found the guy, I can't remember the exact numbers, but he had, 500 subscribers, but he was adding 150 every month, and the 150 was going up. And so it was kind of like, holy shit, and before we know, I mean, by the time he was done, he had 200,000 subscribers. So, that kind of growth is just, that's evidence that something's working. And you're seeing the same thing going on in Bitcoin, by the way, right? I mean, there's just enormous, adoption and growth and increased users, and ETFs are bringing all that. Let me tell you about a couple that I missed, all right? So Amazon comes along and Google comes along. And when I started my own fund, the first thing I did was, okay, I'm going to start looking for growth at a reasonable price. And I found it in India. We were doing cell phone providers that were growing 40% a year and trading at 3 times earnings. So that worked. Okay. But I was looking in the US as well. And I saw that Amazon was growing. And I also saw that, Google was growing. But in both cases, particularly in the Amazon case, they weren't making any money. And so I was putting my old finance lens on it and saying, well, yeah, it's growing, but they're growing revenues, but they're making it up and losing money and making it up in volume. And they were able to do it because of ZIRP. Okay. In other words, their cost of capital was incredibly low. I mean, Jeff Bezos basically destroyed middle and Main Street American retailers because he had no cost of capital. And so he could, and he went around buying, he paid tons of money for warehouses and warehouse picking and all that. He could foresee where we were going, and he didn't have any cost of capital. It was stunning. But he wasn't making any money. And what I didn't realize is he was running the old monopolist play, which is to lose money until you've got a monopoly, and then you can increase your prices and make a ton of money. And so I didn't realize that was the game he was playing. And so I thought it was a flawed strategy. And so I didn't invest in it. And I deeply regret that. The one with Google was similar, but they weren't doing it so much on free capital. What I couldn't understand about Google was I used Google, but I never clicked through on the ads. But I thought to myself, how does this, this doesn't make sense. I mean, these ad people are getting duped. I mean, they're paying a ton of money to put ad at Google, and to get placements on Google, but it's not working. Now, I was wrong about that, but because of that, I couldn't see it. But they were both very similar kind of network businesses that got more valuable as more users joined, okay? So I'm not going to make the mistake, a third time. So when I saw Bitcoin and I realized what it was a network of money, and it was growing, steadily and exponentially, and that everyone needs money, and that it is, truly the best form of sound money. I mean, as Saylor and Preston have said recently, there's no deflection in it. There's just 21 million of them, and that's it. It's just, to me, it's such an obvious, clear bet. And, you said price predictions. I mean, I have no idea where it's going tomorrow, or I don't know where it's going to be at the end of the year, although I mean, I'm guessing maybe 100K or something, but, I'm absolutely certain this is going to be 200K, and then someday it's going to be 1 million, someday it's going to be 2 million, someday it's going to be 8 million per coin. I'm talking that, because that's just the natural progression of, the growth of a network. And so, that's why I'm pounding the table just to, and people getting into it, they think, well, I'm paying too much. I mean, I have a friend who's very, very wealthy, and, he knows my average cost is quite low, and, you just can't bear to pay 60 or 70 grand. I said, look, you it doesn't matter. I mean, I paid, I don't know, whatever I paid, I mean, in the thousands for probably as an average. But, Max Kaiser was paying $2, and I don't regret Max. I just recognize that, someday my average cost is going to seem incredibly cheap to somebody who's paying $2 million a coin. So it's just, it's Saylor's point. I mean, it's going up forever, Laura. I mean, and so, I mean, you can either decide, you're going to buy it eventually. People don't realize that. Everybody's going to buy this eventually. I don't think anyone realizes, or I don't think a lot of people realize that. So you might as well buy it now versus waiting and having to pay a lot more for it in the future.
People will rush to buy Bitcoin when problems with traditional currencies get too big to ignore, driving its value to previously unheard of heights. He tells new investors that they haven't missed the chance to buy Bitcoin, even though they think they have. He says that Bitcoin is still in its infancy, and it will only get bigger from here. He also talks about his Microsoft investment and how it paid off greatly. He also says that he sold some shares early and now regrets it. According to Larry, wealth is created by the accumulation of value over time. Bitcoin is a unique asset that will change the rules. Last but not least, he says that Bitcoin is a technological advance that will last, not just a passing trend. Because of this, he advises people to buy as much as they can afford and watch their investments grow over time. They will be glad they got in on something revolutionary early on, and they can still join the party as they watch more clips from Lawrence Lepard's interview.
And the answer is nuanced. Okay. So, the internet really started to take off from an investment point of view in 95 when Netscape went public, and Netscape was the initial browser, right? And the run up from 95 to 98 was quite substantial. If you go back and you look at some of the leading companies at the time, Sun Microsystems, a microcomputer company, or Cisco Systems, which is the router company, probably the most important piece of the infrastructure of the internet, they all went up quite substantially, multiples of their value from 94 till, say 98. Okay. And it actually was getting pretty nutty. I mean, I was originally buying companies at, 1 or 2 times revenues in the early mid 90s, 93, 4, 5. And, by 98, they were selling at 5, 6, 7, 8 times multiples. And then in the summer of 98, something happened that's very relevant. Russia had a crisis, and actually there was a crisis in the Far East as well. But the bottom line is there was kind of a currency event that then led to long-term capital management blowing up. Long-term capital management was a highly leveraged hedge fund run by a bunch of PhD geniuses in the United States who were absolutely convinced they had a money-making machine by playing the bond market using leverage. And of course they blew up, as so many of similar guys like that do. And this was in the fall, August, September of 98. And they were big enough and they had enough of the Wall Street players involved that they would have taken the entire, market down and Wall Street down. And the Fed came in and they leaned on all the investment banks to basically bail them out. And they dropped interest rates. They injected a ton of liquidity and they more or less papered it over. And the one investment bank that didn't play, by the way, is Bear Stearns. And of course, that's why Bear Stearns was assassinated first in the great financial crisis, because they hadn't played the game. when they were, when the gun was put to their head by the Wall Street cartel. So, that occurred, and that bailout, so to speak, and that cut in interest rates and that boost in liquidity got the next leg going. And honestly, I thought at that point in time, I thought, this internet thing has gotten a little bit frothy and it's about to cool off. But I was quite wrong. It took off on another leg, and then it really got nuts. From 98 to 2000, things went from 10 times revenues to 100 times revenues. And, pets.com came public. And you just had all kinds of insane shit going on, to the point where, just anything. You saw basic companies putting .com in their name. It was a nutty time. And my partner and I, we would sit around and say, are we the only two guys left in the world that...
Larry really loves Bitcoin and believes that its widespread use will solve the problem of inflation around the world. In a recent post on his old account, he talks about how inflation caused wealth inequality and is glad that Bitcoin came to the rescue. Inflation is the problem of our age. It's what caused record wealth imbalances and unfairness. The age of inflation began in 1971. Going off the gold standard has nearly ruined the world. Thank God for Bitcoin. Lawrence Lepard is bullish on Bitcoin and always shows it on his X handle. In a thread started by gold enthusiast Peter Spiner, he said that Bitcoin's power had already killed gold in another post. Larry said that the sooner you buy Bitcoin, the better. He said that yesterday was the best day to buy Bitcoin and today is the second best day. Prices will keep going up forever. Laura, there is a case for banning fractional reserve banking, which, by the way, Bitcoin does pretty well since it keeps making news. What do you think about this interview? Do you agree with Lepard that Bitcoin is a great investment? How much money are you willing to put into Bitcoin? Please let us know in the comments, and don't forget to share this video and hit the like button. Have a great day, and don't forget to join